Welcome to weekly view on markets. Markets have bounced back from lower levels and gained 2.27% during this week. It was all around buying and most of the sectors have gained. Mid cap and small cap sectors outperformed and posted gains of more than 4% during this week. Charts have given intermediate trend reversal and indicate further upside in the coming week. MPC meeting, that is Monetary Policy Committee meeting, has infused liquidity in the money market by reducing CRR by 50 basis points. So this is good for the markets. Food inflation and global geopolitical developments pose a risk to the market. Food inflation has been very sticky and it refuses to come down. It is a problem for the RBI also. Investors can look for long-term gain by investing now as the trend reversal has taken place. From intermediate bearish trend now, charts are showing trend as we will see when we look at the charts. And short-term volatility could be there, but there is definitely a long-term gain for the investors. Regular investing through SIP is the best method of wealth creation for retail investors. Now let us look at performance of indices. Nifty has closed at 24,677. It has gained 546 points. That is a up move of 2.27% for this week. Bank Nifty has closed at 53,509 and gained 1,453 points. That is gain of 2.79% for the week. Mid cap index gained more than 4%, that is 4.10%. It gained 2,311 points during this week. Closed at 58,704. Small cap index also gained 4.51%, that is 841 points, and closed at 19,492. Small cap index is nearing to all-time high levels again. India VIX is steady at around 14.14. Now let us look at performance of different sectors. Realty sector has gained the most, that is 5.27%. PSU banks also gained more than 5%. Consumer durables gained 5.01%. Metals, media, information technology all gained 4 to 5%. Commodities, auto sectors, private banks, manufacturing, infrastructure, healthcare, public sector companies all gained between 2 to 3%. So there was all around buying. Both the FII and DII have bought during this week. Only sector which lost is FMCG, which lost 0.34% during this week. Now let us look at technical charts. This is the daily chart of Nifty. Here we can see it had given a head and shoulder pattern earlier. This was the head and shoulder, and it entered into a intermediate bear phase where chart was making lower bottoms. Now the trend reversal signal has come. It has made a inverted head and shoulder. This is the inverted shoulder. This is the inverted head, and this is the second inverted shoulder. This is called a inverted head and shoulder, which is a bullish trend reversal pattern. And this pattern is completed. Uh, this pattern is giving a bullish target of 25,800 for Nifty in coming weeks. This is the chart of Nifty mid cap index. Here we can see after touching a high of 60,925, mid cap index started making lower tops and lower bottoms. Now, for the first time after the lower bottom, it has made a higher top. This top is lower than this top. So, or this top is higher than this top. So, this is also giving a kind of and reversal. And my view on Nifty mid cap index is also bullish at this point. This is the chart of Nifty small cap index. After hitting a high of 19,640, Nifty small cap index started making lower tops, lower bottoms. This was the bearish trend. Now, for this bearish trend, this was the resistance line, connecting the higher tops. And it has gone above this conclusively and it has shut off all bearish implications. And Nifty small cap index is almost near the all-time high level. Coming week, Nifty small cap index is likely to make all-time high again. This is the chart of Bank Nifty index. Bank Nifty index has cleared this congestion zone. This was the congestion zone for the Bank Nifty index for more than 1.5 to 2 months. And now it has gone above 53,000. It has cleared this congestion zone. And since RBI has also lowered CRR, this is giving more liquidity in the market, which is good for the banks. So I see Bank Nifty index again going to the all-time high of around 54,300 and it may go even higher and record a all-time high. Now let us look at some of the macroeconomic and market fundamentals. RBI MPC committee meeting was there during this week. They have cut the CRR, is compulsory reserve ratio, by 50 basis points, which will infuse liquidity in the money market and it is good for the banks and all the market participants like NBFCs. GDP growth for the current financial year has been fixed at 6.6% by RBI. Food inflation is persistent. It has become very sticky. Inflation refuses to come down. So this is one point where we have to wait and watch. If the inflation comes down, then RBI may think of reducing interest rates. RBI forex reserves is at record high of 659.09 billions a week. Foreign exchange rate is at 84.69 rupees per dollar. Dollar index is at 105.97. Brent crude prices are quite steady at around $74.54 per barrel. Gold prices after hitting almost high of 80,000 rupees. Now it is at 75,700 for 10 grams 24 carat. FIIs have consecutively bought for the second week. Previous week also they had bought in equities. This week they have bought 11,933 crore and DI also have bought 1,792 crore in equity during this week. Both FII and DII buying interest is likely to take the market further up. We have looked at the charts. The charts have given trend reversal signal. The intermediate bearish trend has come to an end, and markets are again in the positive trend, and bounce back from lower levels have been faster than expected. I was expecting market to consolidate at lower level maybe for another one more month, but markets have really bounced back very quickly as FIIs have started buying in last 2 weeks. Investors can start accumulating stocks gradually. It is not advisable to put all the money at a time. Geopolitical risks are still there, which is beyond the control of Indian government or officials. So geopolitical risks, any development in other countries may pull down our markets. Investors have to keep this in mind. By and large, Indian macroeconomic fundamentals continues to remain quite good, and they are going stronger. With all this, there is a lot of money to be made from the markets in the coming months and years. Investors need to have patience and have a long-term view despite the short-term volatility. Any correction will be swift because the corrections are being used by institutional investors to buy quickly. The corrections will be very quick even if it is there, and investors have to use that opportunity to buy good quality stocks or invest in mutual fund at that point of time. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions. We will meet again next week. Thank you.